It promises to be a crucial week for the global financial markets as the US Federal Reserve gears up to unveil its monetary policy decision later on Wednesday night. Now, the era of easy money may officially come to a close as the US Fed Chief Jerome Powell has indicated that the central bank will go ahead and push the pedal on interest rate hikes this month itself to tame the red hot inflation. Remember, US inflation is hovering at 7.9%, which is at a 4 decade high and much higher than the Fed's comfort zone of 2%. But it's not just the interest rate hikes that will determine the market direction. Market men are also watching out for Fed's outlook or comments on how it plans to unwind its massive $9 trillion balance sheet. Well, that is something that the street will keenly be watching out for, as it will suck out the excess liquidity from the system. Now, the Russia-Ukraine conflict is another thing that has added another layer of uncertainty, with the oil prices surging to highest levels since 2014. So surging oil prices, the interest rate hikes, as well as a global supply squeeze due to the Russia-Ukraine conflict is something that poses a threat to the US economy that has seen quite a bit of momentum and recovery since the pandemic, with the unemployment rate also hovering at record lows. Now, the troika of high interest rates, oil surge, as well as global supply squeeze poses a threat to the US economy, and it could push the US economy into a recession. Now, Goldman Sachs has already slashed US growth forecast for the current year. In fact, it believes that there is a 20 to 35% chance that the US economy may slip into a recession this year. So, against the backdrop of a long list of irritants, the Fed has to be extra cautious when it comes to balancing out rate normalization as well as unwinding of its massive $9 trillion balance sheet. So let's wait and watch and see what the Fed chief has to say on Wednesday night. I'll get you all the updates on that. Stay tuned to the space for more.